All right, welcome everyone to the Buyout Trader Live monthly call. My name is Doug Hill. I'm here with Zach Scheit and James Altucher, and we're here to answer your questions about what's going on in the markets and how we're actually going to trade the markets as everything that's going on. It's 2:00 on Wednesday. The Fed, what did they just announce? What are they doing with
Uh,
rates?
Looks like they're keeping it steady. The decision was unanimous. Markets are kind of back and forth flat right now, so we're not getting a huge reaction one way or the other. The
All
big
right.
deal will, I think, be the Fed press conference when he answers questions, and that's when all hell could break loose, up or down, depending on what he says to in regards to different people's questions.
I mean,
All
I
right.
think I think the market kind of has it right though, in the sense that the market itself seems to be thinking that they're not really going to go crazy raising rates again. I mean, it's at a 22-year high. They've raised it 14 times in a row until they or 14 consecutive ones until they started slowing down. And now they're just waiting to see if there's a recession or not. And the tricky thing is when they say things like the economy is strong, then people get worried. They're saying really that it's inflation. But
Mm-hmm.
it's a very complicated time where you don't really want the economy to be strong because then the Fed might raise more rates, but you don't want a recession either because then businesses don't do well. So we're just in this weird time. And then throw on top of it potential for World War III. And I'm surprised the market, and I've said this before, but I'm surprised the market is holding up as well as it is. But
Yeah.
the fact that it's holding up well means there's a lot of underlying, like there's a lot of cash that wants to buy, like even in a scary environment like this, which in many other gears, an environment like this, the market would be going down today, but it's holding up strong. Like this is a good sign that people want to buy stocks. Now, do they want to buy stocks or do they want to buy the top 7 stocks? So the S&P 7 is up on the year, but the as a group, the other 493 in the S&P 500 are down on the year.
Yeah.
And not all of them are down, but as a group, they're down. On average, they're down. And that's the problem we're seeing, is that although I think we're in a great environment for buyouts to start, and that will happen because there's more cash than ever, there's more innovation than ever, and on, all the reasons we usually say, but people are legitimately nervous because of this war, because of the Fed, because of the economy. It'll work itself out, but people are nervous right now.
Yeah, and I do think that it's important to remember as we're looking at I mean, if you're not in one of the top 7 stocks in the S&P 500, you're probably like looking at your portfolio. Like I don't buy massive big stocks. I mean, typically, right? So a good portion of my investment portfolio is in smaller stocks, and everyone's talking about the market, holding up, and I'm like, not for my stuff, right?
Right.
So and so it's kind of frustrating from an investor standpoint, but someone said trust the process, and I
Yeah.
do think that's an important message as we're moving through this and trying to figure out what's going on in the markets. And there are takeovers happening, right? Zach, before the call you mentioned a couple, certainly in the oil space. ExxonMobil and Chevron were both active. Would you want to talk about those a little bit, and
Yeah, that was a major one.
within the context of what we're doing here in Buyout Trader?
Yeah, I think the main thing to realize there is that there are companies that have a lot of cash, and companies that do have a lot of cash are seeing opportunities in the market right now. And in some cases, it actually helps for a stock to trade lower before a buyout takes place, because that gives a purchaser more of an incentive to actually pull the trigger and make that buyout. And I was telling Doug earlier a personal story on this. If the analogy helps, the first time I ever bought a car, I was fresh out of college. I had hardly any money, but I'd saved up for a car, and I looked on Auto Trader, and there was a Honda Civic that was offered for something like 1,200, $1,300. So I went and I test drove it, and it was being sold by some 18-year-old whose dad was buying him something better. Um, and so I drove back into his driveway and I said, "Hey, listen, I like the car, but I don't want to spend this much on a car. What's the lowest amount that you would accept for this?" And he said, "Well, I would accept 800 for it, but I really want to get more than that. And I told him, okay, well, I've got 800. I'll give you $800 for it. He goes, oh, no, 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 no. I'd like to get more, but that's
Yeah.
just the lowest that I like. I said, buddy, you already turned your cards over. You already
Yeah.
showed me what your negotiating tactic is, and I'll give you $800 or I'll leave. And he said, okay, I'll take it. And it's a silly analogy, but it ties back to our buyout plays. We've had some of our plays that have traded lower, and I'm not happy about it. I'm sure James isn't happy about it. I'm sure you're not happy about it. But at the same time, the lower that price goes, the more incentive there is for a buyer to say, okay, I am now ready to write that check. And that can then trigger these buyouts that always happen above the current market price.
Right.
Because you can't actually do a buyout at the current market price. You can't, because every investor would veto it. If I wanted to sell at, 43 bucks right now, I could sell it in the market for 43
Right.
bucks. Why would I accept a buyout? And so the buyout has to be above the current market price. But as these stocks have pulled back a bit, it just makes it more. There's more of an incentive for a company like a Microsoft or a Google or somebody to say, all right, we can now give you a 50% premium to where the stock is trading now because it's pulled back. So then we get a big jump once that buyout deal is announced. And then one other thing, just before we move on, just from a really big picture perspective, interest rates have been rising. That's been the story of the summer and the fall. Interest rates are moving higher, which naturally drives prices for specifically growth stocks lower. And there's mathematical reasons for this. There's the whole efficient market hypothesis and discounted cash flow and all the things that the CFAs and the deep analysts do to value these stocks. And we don't want to get that far into the weeds. I've done all the calculations. I've learned how all that stuff works. The bottom line is the higher interest rates go, the more pressure there is on growth stocks specifically. And we're now at a place where the Fed's just paused for the second time in a row. We are seeing interest rates peak and start to roll back over. And once that rollback over starts to happen, that's when I believe there's even more of a kind of a big picture pressure on these larger companies to say, all right, now is the time to pull the trigger, because if we don't pull it now, these stocks could rise 50% by themselves. And then if we want to do a buyout, we have to pay even more. So this is kind of like that turning point, I believe, over the next few weeks as we see interest rates start to level out and then potentially trade lower, where it does give these big buyout transactions more of an incentive to happen.